Hi everybody and welcome to the Wall Street Report. I'm Jennifer Schonberger. We've got a special show for you today. We're delving into the outlook for the economy, the stock market, and where to invest next year. But first, we take a look back on 2012. Almost another year on the books for the markets, and what a year it's been. After a spring swoon, stocks marched higher over the summer, reaching shouting distance of all-time highs in September. But by October, worries about weakening earnings, the fiscal cliff in Europe gave way to a pullback, though the market shrugged off worries and started its ascent again in November. As of mid-December, Standard & Poor's 500 stock index was up nearly 11% after rallying as much as nearly 15% through September. As of the third quarter, S&P 500 companies paid out $200 billion in dividends, with companies on track to pay a record $80 billion in dividends in the fourth quarter ahead of the looming fiscal cliff. The estimated full-year dividend payouts of $280 billion compare with $240 billion in dividends paid last year. Despite stocks gains, bond funds captured the lion's share of the money for the year. As of the end of October, nearly $100 billion flowed into bond funds, while U.S. stock funds saw the complete opposite, outflows of around $100 billion. But the real story of the year may have been the NASDAQ. After reaching its highest level in September since the year 2000, the tech-heavy index was up 13% for the year as of mid-December. It was a busy year on the tech front. Among the major stories, Facebook went public in what became one of the most controversial initial public offerings, while Apple became the biggest company ever measured by stock market value. Stocks managed to rack up solid gains despite the trickle of troubling data, thanks in large part to the Federal Reserve's stimulus. The central bank launched an historic open-ended third round of bond buying, stating it will buy $40 billion worth of mortgage-backed securities every month until the labor market improves. The Fed also said interest rates will remain at zero at least until the middle of 2015. The Fed's policies are helping the housing market recover. Home prices finally began to rise this year after falling for nearly 6 years. According to S&P Case-Shiller Home Price Index, 20 major metropolitan areas saw home prices rise by 8% for the first 9 months of the year. And housing is boosting the economy for the first time in 7 years. President Barack Obama won re-election with nearly 51% of the popular vote, defeating Governor Mitt Romney in the 10th closest presidential election in U.S. history. Obama became the first president with the highest unemployment rate to win a second term since FDR. Speaking of which, the unemployment rate started the year at 8.3% and ended the year at 7.7%. Across the pond, the European debt crisis raged on. Greece teetered multiple times before barely managing to stay in the euro. But the most significant turning point of the year was when Mario Draghi, head of the European Central Bank, pledged to do whatever it takes to preserve the euro. The ECB launched an unlimited bond buying program for Spain and Italy in September, calming investors' fears and bringing down yields on Spanish and Italian bonds. Even so, by the third quarter, the Eurozone had officially sunk into recession amidst major spending cuts and tax hikes in southern European countries. Meanwhile, Chinese growth slowed and the world's second-largest economy ushered in a new leader for the next decade. Back in the States, markets and politicians alike continue to wrestle in the 11th hour with the fiscal cliff, or $600 billion worth of tax hikes and spending cuts scheduled to kick in January 1 that could plunge the economy into recession if Congress can't make a deal by year-end. That brings us to the final stretch. So what's on tap for 2013?